warm welcome to our regular viewers. If you're joining us for the first time, welcome to the Rand Multiplier community, where we'll be looking at lazy way to wealth creation, investing in JSE listed shares or ETFs. We want to keep things simple and clean. Our understanding is that majority of us, we don't have time or resources to research about how businesses are run before we buy shares in the different companies. So we leave that to asset managers who are trained to do the speculation and the forecasting. So this presentation will be particularly of great benefit to those who want to create wealth by investing in financial markets and want to sleep better and not have to worry about what will happen tomorrow with the markets or what company is doing this or worry about all those things, but just want to have a peace of mind while creating wealth, investing in financial markets. And the solution is very simple. It's just to buy the whole world, right? That's the solution, is to just buy the whole world. And this is what Lars says. We should invest in stock markets in proportion of their share of the world equity markets within the bounds of practicality. What it means is that looking at the world equity markets by country, US here we can see that it makes up a large portion of it. And we can followed by Japan, UK, and China. So that means when we buy the world, right, and we invest in stock markets in proportions of their share of the world equity markets, means that if I have 100 rand, or if you have 100 rands, that means 54 rands will go to the US and the rest will be distributed across this other country. In that way, we are not going to actually speculate or focus which economy or which country will do well. We'll just buy all the countries or we'll just buy everything, right? But there, when we buy everything, it will be in proportion of their share of the world equity markets. What happens is that if you're in South Africa, you will actually buy more and you find that in your portfolio, you are heavily invested in South Africa, and we call that home buyers, and it happens everywhere. So home buyers is the idea that you know more about the local markets than the rest. But the problem with that is what happens if your country actually the economy collapses. That means you're in big trouble, right? So why do we buy the world ETF? Because it gives us diversification. It gives us diversification in the sense that you have different, you have multi-assets, or we have the world ETF investing in different sectors, which is very important for an investor. But you also get geographical diversification. In this way, you are not going to only invest in the US, but you are buying everything. You are buying the whole world, right? So that gives you some sort of geographical diversification instead of focusing on one country. What if the country becomes, the economy collapses? That means you're in big trouble. So geographical diversification is very important and also protect you from the weakening of the rand in South Africa. So the other advantage is that it's low cost, meaning that the costs are very low because you are not going to buy individual shares in those different countries. That will be an expensive exercise, but actually you just buy the world ETF, which gives you that diversity and exposure, right? So John Bogle, one of the founders of the Vanguard, says, owning the stock market over the long term is a winner's game, but attempting to beat the market is a loser's game. And my understanding is that a lot of our viewers here and members of this community, what we want to do is to win with money. And we want to actually win with money, but at the same time having some form of peace of mind without having to worry a lot and to try to keep things as simple as possible. So let's look at some of the world ETFs. Right, in South Africa, we can see that we have One Invest, Satrix, we have Signia and SB10. All right, those are rand denominated, meaning that you can invest in rands, right, and have exposure to those world equity markets. So we have grouped One Invest and Satrix because they're feeder funds, meaning that they're allowed to issue ETFs, even though they do not own the underlying assets, right? MSC World, which is iShare by BlackRock, is the one that owns the underlying assets. All right. So the global HBTON Global 1200 is because it has 1,200 shares. All right. But the rest are really tracking the MSC World. So now let's look at how they pay dividends and the total expense ratio, because those are some of the decisions that will help you when you want to buy them. This information, we find it from the fact sheet. So I'm giving you homework now to go and look at the fact sheet of each and every ETF or one of the ETF that you are going to buy. You must learn how to read the fact sheet. You will find information about the total expense ratio and the fund objective and the top holdings within that fact sheet. So if we look at One Invest, we can see that the total expense ratio is 0.4. The Satrix we can also see 0.35, and those two, they reinvest the dividends. And it is actually cheaper for them to uh, to 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 this TER is actually lower because they actually do not have to own the underlying asset. They actually just have to invest in the MSC World, which own the underlying asset. And the total expense ratio is 0.24%, and they pay dividends twice a year. And it is important to note that the iShare by BlackRock is in USD, so it's not rand denominated. So it's actually not a fair comparison for someone who wants to invest in rands, right? But we are putting it there because it is the one that the two companies, One Invest and Satrix, invest in. So we can also look at the Signia MIC World, which owns the underlying asset and it pays dividends twice a year. And we can see the TER, or the total expense ratio, is very high at 0.68%. And the HB10 Investment Global 1200, we can see the expense ratio is 0.57%, and they pay dividends on a quarterly basis. Uh, it is important to understand that the TER is charged within the fund, and it can impact the returns. The higher the return, the higher the TER, you are more likely to get less returns than you will get compared to a fund that offers the same thing with a lower TER. So now let's look at the fund performance. We can see when we look at One Invest, we can see that its performance is close to what we see for Satrix, right? You can see that we prefer here to look at longer terms, 19.74% over 2 years. For the One Invest Satrix, we can see 20.11, and the difference between those could be just that mere 0.5, right? I mean 0.05 between those funds. That difference, right? The difference in the TER sometimes is the one that causes the difference in the performance, but also there could be tracking error, and that's something that we can explore in some other videos, right? We can also look at the Signia iTrix. We can see the performance, here it seems to be really low. And when we look at actually the TER, it also has the highest TER, right? The highest total expense ratio, which could also be explained, as we mentioned earlier, by the TER itself. I mean, the higher the TER, that is more likely to impact the returns, because the higher the TER it is on your returns. HBTON Global 1200, we can see doing very well there. And it's, even though it has 0.57% TR, but we can see that its performance is closely linked to that of the Satrix and the One Invest, right? So keep in mind that past performance does not guarantee future performance, and that is very important, right? We should not select funds based on their performance, but it should be linked to the strategy, or to our investment philosophy. So now when we compare those world ETFs with the Satrix top 40, right, these are the 40 largest company in the JSE, we can see that the payrolls where the top 40 outperforms the world ETF, right? But here the point is just to give you a comparison between our local ETFs here, such as the Satrix 40 and the world, just to see that There are times where the Satrix 40 will do better than the world, right? Unfortunately, we're just looking at a short period, which is actually not a good idea. So now, this is the most interesting part that it is actually interesting, right? If we look at the top holdings, this is the SB10. The top holding of the SB10 is Microsoft. We can see at 3.81. It also has Apple, right? Amazon, it has Facebook, right? That means when you invest in a world ETF, right, you are going to benefit from the growth of these companies, right? That's something that one should always remember when buying world ETFs. So you can see that even you can own part of Berkshire Hathaway, which is owned by Warren Buffett. So all those companies, right, they are inside the world ETF. That's something to keep in mind. So now, what if we look at the iShare MIC World by BlackRock? This is where the Satrix, the one investor invested in. We also see the same thing, right? You find that Apple is at the top, right? 3.78%. We have Microsoft, we have Amazon, we have Facebook. The growth of this company is something that is going to benefit you as an investor in these world ETFs, right? So you will not miss out on any spectacular growth of Amazon or Microsoft. But of course, there will be differences. I mean, if you are investing in an ETF and when you invest in only Amazon as an individual stock, right? Of course, there will be some returns there. There will be some difference in return because in ETF you get average return. So now, what if we look at the Signia MIC world? We also see that the top holding is Apple and the one is Microsoft, then Amazon, then Facebook, right? So this means that Apple and Microsoft and Amazon and Facebook, they have the highest share of the equity market, right? That's why they are also at the top, right? So those are the companies that are within those world ETF. And when you buy this ETF, you actually get exposure to any profits, any dividends, anything that is made by those companies. You actually benefit from that, right? So now there are several places that we have also spoke about in the previous presentations where you can buy the world ETFs. So you only need to buy one, all right? You need to buy one. You don't need to buy two because you'll be buying the same thing actually or similar things. Just buy only one. So we prefer the ETF SA because here the spreads are actually low and one is likely to buy ETFs close to its net asset value, but there's also Signia asset management through either Signia Alchemy platform or one through Signia itself, having to fill forms, or Easy Equity. Right? Most people are familiar with Easy Equity, which has actually democratized investing. If you're investing, so one can actually buy any of those ETFs through Easy Equity. The issue there is just only the spread can be quite big. If you are going to buy a lot of shares, that could have some impact, right? But those are things that we'll look at in the other presentation. And here's something for you. Please do not go. Please answer the questions below, right? This is just for fun, no marks, right? But the first question is based on what we have covered. What are the benefits of investing in the world ETFs, right? Now that we are at the end of the presentation, what are the benefits, right? And what are the top 5 holdings in the world ETFs? We just spoke about them now, right? What are the top 5? Right? Those are some of the things that one should know, right? Even though we are not going to do a lot of research about companies or speculating, but it's important to understand the ETF that one is buying, and most of the information is found in the fund fact sheet. And I encourage you all, if you own or if you are going to buy a world ETF, because that's actually what any rational investor should do, to buy only just one world ETF. Just look at what are they holding, what is it holding, and which markets is it invested in, and what is the fund objective. That's the only thing that you need to know. So the last one, feel free to share the comments to comment or to share your answer on the comment section below. which world ETF will you invest in and why? Right? Which world ETF will you invest in and why? And as we conclude this presentation, Lars says a world equity index is the only equity investment a rational investor ever needs to own. Please remember and act on that. Thank you.